Hi Daisy.
Hello, Daisy. Hi, Emma.
Thank you for joining us.
Hi,
My name is
Valentine. I'm happy to be here.
Hi. Thank you.
Great.
Hello, guys. Hi. I think we shall begin. It's almost 7:30. Thank you for joining our webinar today, joining our financial playbook. We had to postpone it because of some circumstances that were arising. But today we decided to, before the month ends, the last week of July, we have to finish strong. So I will introduce my co-host, Cecilia. Hi, Cecilia.
Hi, good evening.
How are you today?
I'm good. You can hear me?
Yes, we can hear you.
Okay.
So you can introduce yourself and tell us what you do.
All right.
Hi,
Thank you.
Wangoi. Mhm.
Yes. So my name is Cecilia Masharia. I'm Miss Masharia. I'm a finance analyst and a tax consultant. So basically, I do anything to do with taxes and also to do with compliance. So on all the statutories that we have in Kenya. Yeah. So basically, that's what I do. And I'm here today to give you a snip of what has been happening in July. Uh, yeah, actually, it's June, July for the 2 months in the finance part. So I'm so sure so many of you people don't know like what has been going on, and I'm here to give you that info. Yeah.
Thank you, Cecilia. And I am Valentine Imali. I'm a financial advisor and a wealth advisor. I run the Malay Insurance Agency, and I run also Sapphire Vest, which is a financial training company and a consultancy. So today, as Cecilia has said, we're going to talk about the June-July market insights, investment insights, and tax insights, because all of them affect you in one way or another. And if you ignore one, you pay a price in the long run. You pay a price in the long run. So give me a minute. I share my slides. Are you able to see them?
Yes. Yes.
Okay. Yes. So I'll take you through the June-July investment part of the June-July highlights. So we'll start first with how I describe wealth. Wealth for me is the essence of life, is the reason why we wake up every day and work hard, so that everyone wants to achieve financial freedom. Financial freedom is always the goal. So I separate wealth in forms of wealth creation, wealth protection, and wealth distribution. This is where we have the active income, passive income. Active income is what is means where you are required to actively participate. Without you there, without your knowledge, your skill, and your active involvement, you won't be able to raise an income. Especially like farming, you have to till the land yourself or hire people to do the manual work. Employment, you have to show up day in, day out. Passive income which is what we'll focus more on today. We have the money markets, the shares, circles, and bonds, which is where money flows into your account without necessarily you having to put in the manual labor. Able to earn interest, compounding interest through money markets, dividends through shares and capital gains, so coupon payments in bonds and treasury bills. Protection is where now we have insurance. You have insurance where now you're able to secure what you have so that when it's an emergency occurs, you don't go back to point zero. Insurance is able to reimburse you to your former previous position. This comes like medical insurance, business insurance, retirement planning also falls here, life insurance, critical illness when you're diagnosed and you need to be taken to abroad for urgent medical treatment, able to be given a lump sum payment at Tago so that you don't spend too much time, what's called fundraising. Then distribution, this is where now all your assets and all your incomes are put together in the form of an estate plan, and then you're able to family estate plan trusts, and you're able to dominate your beneficiaries so that in case of anything, people do not undergo probate fighting over your properties. They're able to have a clear and quick succession. And medical trust can be also for like your elderly parents when they get sick. Most becomes too expensive to cater for them for medical insurance. You can set up a medical trust for them. And also an education trust for like if you're an institution or an organization, you can set it up for education purposes for your children when you're not there. Yeah. So in a nutshell, this is how I describe wealth and how every decision that you make should fall between either creation, protection, and distribution. And they all work together in an ecosystem where one depends on the other and none of them outshines the other. So let's proceed to the July insights. So I will tackle mostly the passive earning ways of earning passive income of wealth creation aspects. Let's start with the treasury bills. The month of July has seen very low interest rates because the CBK reduced the lending rates. So which led to the interest rates declining to 8.12 for the 91 days treasury bill, 8.43% for the 182 days. This is 6 months treasury bills, and 9.7% for the 1 year 364 days treasury bills. The average rates of treasury bills is usually around 10 to 12, so 9%. This shows that they are really performing below average. And I think investors are pushing for higher rates for treasury bills. Hopefully, depending on what CBK decides. So money market funds use treasury bills as the benchmark for their rates. So when the treasury bills rate is 9.7% for the 364 days, consequently, money market funds also mirror the same rates to 10 and 11%. Any cumulative any investment that is giving you a higher rate, it's not a money market fund, it's a special fund, because all collective investment schemes use treasury bills as their benchmark for their investments. And one of the functions that you can use money market for, is as an emergency fund to meet emergency needs when they occur. You can put like 6 months of your investments in a money market fund to cater for all your emergency needs. You can use it as a sinking fund. Say if you wake up tomorrow and your tires are deflated and you need to tap into something and to pay it, you don't necessarily have to wait until the end of the month. Maybe if you wake up tomorrow and your fridge is not working, where do you get to go and get the additional funding for your needs? And you can also save in USD denominated funds to save, or you can also use it as a fund. So I think we are mid-year and December is coming. I don't have to wait until the 25th December to say, I'm not KCC, I cannot remain in Nairobi. You can start saving early enough in a money market fund, cater for your travel needs or whatever fun activity you might want to do with you and your family. And if that fun activity may require you to change your denomination currency into USD, then you can easily just opt out to saving the money market in a USD denominated fund, so that you don't think you're saving too much money, yet when you go and do the exchange, you end up with less money. So it's a very good way to hedge against the dollar inflation and movement of the dollar rates. So you can start by saving in US dollar denominated funds. This is an average rate of the money market funds. As you can see, most of them range between 9 to 10 to 11%, because treasury bills are the benchmark for money market funds. Anything else that is giving you a higher rate is a special fund and not a money market fund. So one of the features of a treasury bill is that the minimum investment is 50,000. Also for treasury bills, and competitive bids is also 50,000 for treasury bonds. Treasury bills are short term, which, as you have seen in the previous slide, they range from 3 months, 6 months to 12 months. Treasury bonds range from 2 years to 25 years. And there are two types of treasury bonds, where we have the fixed income bonds, where the interest is taxed at 15% withholding tax. And some have 10% depending on the number of years. Then infrastructure bonds are usually tax-free. Then treasury bills are issued weekly, and infrastructure bonds are issued monthly at the discretion of the Central Bank of Kenya. Interest of treasury bills is paid at the end of the period, which means they are discounted even at the beginning. Yeah, and interest of treasury bonds is paid semi-annually every 6 months. Then the coupon interest, so the current coupon interest from January to now July has been ranging from 9 to 11% per year. Yes, and the current interest rate for treasury bonds has been 13 to 14% per annum. So this was a bond that was, after the fixed income bond that was reopened in July 14th, dated July 14th, 2025. The government was looking for 50 billion shillings, and it accepted a total bids of 66.6 billion, which we can safely say the bond was oversubscribed. So there is actually demand in the market for the government is actually in demand for more money as to meet the budget deficit. And this budget, they had said they want around 7.8 billion to be I'll confirm that figure to be domestic borrowing. How the government gets money by domestic borrowing is through treasury bills and bonds. So this is a bond that was well subscribed, as the government received 76 billion, but they rejected 10 and only accepted 6.66 billion. So both of them were fixed income bonds, which means they attract 15% withholding tax. The current interest rate for these bonds was 13.2 and 13.4 respectively. And then also at the end of the month, CBK has honored us investors by giving us by floating a reopening to other infrastructure bonds. This is the IFB1 that was first issued in 2018 for 15 years, and it still has 7.5 years to maturity. And also the second one is the IF infrastructure bond that was first issued in 2022, and for 19 years. It has 15.6 years to maturity. So the beauty of infrastructure bonds is that they don't attract any tax. So the interest of the two is, this is 12.5. This is the second one is 12.965 annum. maturity dates in 7 years, 2033, in 15 years, 2041. And then, so for, I think redemption structure, I will talk about it in the next presentation, where the second bond has a 50% encumbered outstanding on 2032. And the first one has 40% of an encumbered outstanding principal amount on 2028. So normally infrastructure bonds are usually floated for 2 weeks. And for these ones, we can see CBK has put in a special margin of 3 weeks. So you have 3 weeks to bid for this bond. Please don't wait for the last minute. Please make sure you at least do it the first week of August if you want to bid for this bond. The deadline submission is August 13, but it can be any time at the discretion of central bank. They can decide even by 1st August they have met their target, they have closed out the reopening. The settlement date for this bond, the last day you have to make payment so that you're not rejected, is by 18th. It's always a Monday. Then the CBK is targeting 90 billion from this reopening of these 2 bonds to cater for funding of infrastructure projects. So if you bid for the first bond, these are the set dates that you'll be receiving your payments. These are 2, 4, 6, 12. You'll be receiving your payments every July and every January. January and July bonds are usually very hard bonds to come by. And if you have a 7-year goal, this is a very good bond to invest in, because now by 7 years, you'll have received back your money. You'll be able to meet your expenses. Then the second one has 32 payments every August and every February. You'll be very rich, because now these are the payments of the coupon payments. As you can see, it has 32 payments every twice a year. So if you have a 15-year goal, this is a very good bond to invest in, since that it will be giving you interest payments every August and every February up to 2041. Yeah, so these are the bonds that are on offer. So I always advise my clients, whenever you want to bid in an infrastructure bond, bid amounts over $1 million and above. Why? As we have seen in the previous slide, it has a redemption structure. I'm going to use the second bond as an example, because it has a high interest rates. Yes, and you can investing in either of the two depends on your financial goal. Do you have a 7-year goal, or do you have a 15-year goal? So it has a redemption structure of 9th February 2032, where an investor will receive 50% of their outstanding principal encumbered outstanding principal amount. So if an investor, say you've invested 2 million shillings in this bond, first of all, on 18th August should be very rich, because you'll have received your first coupon payment. Sorry. This is supposed to be 2 million. Sorry for the error. So this is the 2 million. 2 million every month you'll be receiving a coupon of 129,650. You'll receive a coupon every 6 months, August, February, until 2032, which is there where the bond has a written a redemption structure of 50% of the encumbered of the principal amount. So if you had invested 2 million, you will receive 50% of that, which is 1 million, and then the outstanding principal will be 1 million, where now you'll be able to receive 1 million until the rest of the term. Till the rest of the term. But if you invest only 1 million and below, in 2032, you will have received all your money, which means you'll not have invested for 15 years, but you'll have invested for 7 years. So if you want to maximize the term of the bond, it is always advisable to invest higher amounts and below. And you see, if you invest 1 million, you'll only have an interest of 907 of your investments, because you don't invest for 7 years. But if you invest 2 million and above, when you're getting 50% of your money back, there's also a principal outstanding still, and you still earn a profit. So if your principal is 2 million, you'll have earned an interest of would have earned an interest of 2.981, 2.9 million, which is a better investment as compared to this one, which is 905. I hope it's not too confusing, but that's why I always advise my clients, if you decide to go the bonds way, this is a long-term strategy. Make sure you go big, or go, so that you recoup more of your investment. And also, when you earn the coupon interests, don't don't eat don't eat them. Don't go shopping with the coupon interest one every month or to get them. So reinvest back the interest into a money market account, or any other forms of investments that will give you liquidity, so that you end up maximizing on compounding interest and capital gains. Because bonds also earn simple interest. So an amount that you'll earn 64,000 simple interests is not the same as 64,000 compounded over many years. So when you get the coupons, create a culture of also reinvesting the coupon, so that it is not in vain. So yeah, that's all about bonds for now. So to bid for these bonds, you must have an active DAO CSD account, which is done through the CBK website. You can consult me after this on how to do that and how to bid for this bond if you're interested. And also, one thing to note, our bonds are long-term investments. So this is not money for your school fees for next term. This is not money for your emergency fund. So when you got the bonds enrolled, always do, first of all, a financial audit, so that you're able to do a health check, or a financial health check. Is, am I able to afford this? Will I be able to hold this bond for 15 years? Because selling a bond through secondary market, especially for retail buyers, becomes very, very tricky and very cumbersome. And you might end up even going at a loss, depending on the interest rates. So another aspect that has been trending this month is on the stock market and the shares. So from May, June, July, August, there's always the book closure period and the dividend period. So many companies have been doing their dividends and their AGMs. Maybe if I can ask on the chat, which company have you attended an AGM, either as a shareholder or as a proxy? We've seen companies like Equity, Safaricom, Jubilee, and even, I don't know if Stanchart have done their AGM yet. So all listed companies in the Nairobi Stock Exchange are required to do an AGM, and are required to submit all their books to their shareholders, to the public. As long as you're listed, your books have to be audited and have to be presented to the shareholders during an AGM. And at the AGM is where you get to ask questions and ask the board and the board what happened to the money, what happened to the investments that they did, why they chose those decisions. And book closure is just the date where, for if you are a shareholder by that point in time, you'll be eligible to earn the dividend for that period before the book closure. So if you are an active trader in the NSE, you can be checking which company has declared which dividend, and buy those shares before the book closure, so that you get the dividend between that. But it means you must be very actively checking the stock market to check which companies are doing that, so that you benefit from that. And also, if you are a day trader, so the NSC gainers by market capitalization, I think in Kenya we're so used to Safaricom being the highest by market capitalization, followed by these first half, it was followed by Kengen, NCBA, KCB, Kenya Power, and Stanbic. These are some of the companies that if you want to invest in the stock market at the moment, they are doing very well. Especially stocks for banks are always they're always relatively doing good as compared to the rest, and depending on the market structure. So also this month, what has trended in the stock market is that now we have a new ETF that has joined Kenya shillings. This is a game changer in the market.
Valentine, I can't hear you on my side. Don't know if it's everyone else.
I was muted. Sorry, I was muted.
Oh,
Yeah,
okay.
sorry, I was muted. Oh, yeah. I was saying about the global ETF that is dually listed in the Kenyan stock market and the Johannesburg stock markets, Johannesburg Stock Exchange. So it is new in the country, and we're waiting to see how it will shape up. But the good thing about it is listed in Kenya shillings. We're able to buy it in a Kenyan denominated currency. And also now, NSC is going to target at least four other 40 IPOs, but the past trend has cast a long shadow. I think the biggest IPO we've had in Kenya so far was the Safaricom IPO, and the Ilam Fahari iRate. Also, we've had some companies being listed by introduction, and recently NSC has also opened up. I think this has happened. It happened last week where it allowed the customers it has removed the minimum 100 lot buying, so you can buy shares, even one share of each company. Previously you had to buy 100 shares of each company, but that is it's a game changer in the market. We are hoping to see how it responds. Also, NSE has had to sweep out the inactive accounts in the stock in the so if you have a stock brokerage account and you've not used it for a minute, you either activate it or you forget about earning dividends in the companies that you hold. So I'd advise, since this is the time where stock NSE is trying so much to pick up and become active again, activate your account and gain those capital gains and dividends, and also have a diversified portfolio. I think from there, I will hand over to Cecilia to take up the next part of the presentation. I'll stop sharing.
Okay.
If you
right.
have any question, you can share them in the chat, and then we'll go over them as we finish.
All right. Okay. Thank you so much, Valentine. Think guys were really eager to know about the bonds and the reopening, and also, how Kenyans are with last minute timing.
Mhm.
So I'm so sure
Yes.
whatever you said on the last minute, I don't think it's going to apply. But anyway, believe we are changed people. So thank you guys for joining our webinar. My name is Cecilia Masharia, or Miss Masharia, if you would like. So I'm a finance analyst and a tax consultant. And I'd like to give you a briefing of, it's not really a briefing because my slides are 30, so fasten your belts. But they are interesting. Trust you me. So it's about it's a financial playbook. So we've put everything that has been happening in June, July, in terms of taxes and also things concerning finance that I'm so sure you guys are not aware of, and also the finance bill. The last webinar we had, it was on the finance bill. It was on the finance bill, and then now the act came in. So we'll also have a briefing of what was taken from the act and what was dropped. So yeah, so I'll start with the Treasury shields, where they carry in risk to net the unpaid property taxes. So where the Finance Act, it's part of the Finance Act of the 2025, they amended the Tax Procedure Act in the two change aimed at streamlining the enforcement of tax debts secured against such property. So the main aim of KRA and actually the Finance Act was more on collection. So they want to really maximize on collection, and so that they can maximize on revenue. Yeah. So now it happened that there was some new fraud wave that slowed the VAT collections. And actually, from what was publicized on Friday this week, is that KRA did not manage to collect everything that according to their budget. So they had a budget to collect 2.257 trillion, but unfortunately it was not met. So for the financial year ended June 30th, 2025, they did not collect with 48 billion. So this was because of, how the tough economy is, and also uh, uh, how things are. So that's why they are really trying to collect at all ages. So the other thing is on the domestic VAT receipts, they posted the first single digit growth in the 4 years, with collections so rising to 4.2%. That is equivalent to 327.34 billion. So with the fraud that came up, they were able to flag 4,000 shrewd traders, and this happens when you have liability, or rather when your company have liability to be paid to KRA, but instead they work with Intel, like those people who work in KRA, and give them like something small, and then they'll be able to clear you out from any liabilities from KRA. So that's why it had to slow down all this. So the other thing is on the KRA is that the firms can tap overpaid taxes to ease cash flow was. So this means that if at all you have liability, like KRA liability, uh, instead of them reimbursing you, rather if KRA has your money, or it has some money that they need to pay you, so they won't pay you, because you know how KRA works. They'll never compensate you back. So what they have done is they have gone ahead and done like an offset. So they will offset your future tax liabilities. So there will be no need of you going back to KRA and start requesting for refund. So because your business is continuing, so that's why they've put the offset claim. So then the other one is what constitutes a tax refund. So I think I have explained of how the tax refund has been and how it has been cancelled out with the offsetting. Yeah. So the other thing, which is good news to us corporate bodies, that there is tax-free pension. So this one, it goes ahead to, if you as an individual, you have engaged yourself with a private insurance-based retirement scheme, you can be able to claim it through your payslip. And what I mean is it's going to reduce your PYE. So your take home for that month, it's going to increase because your pension is going to decrease a bit part of the pay. So that's why they are saying it is fully tax exempt. That is for any gratuity payment and pension, and that is in, it doesn't matter. It doesn't matter. It's either if it's public or it's in the private sector. So there is on their non-resident on their pay slips. So for this one, they carry net non-residents in expanded tax collection powers. So what does it mean? This means that for any non-resident, so for example, I'm Asian and I've come to Kenya to do business and I've registered as a non-resident in with KRA. So KRA have been given the mandate to collect taxes from you. So as long as you reside, if you reside in, if you've been doing business in Kenya, so it means that you're subject to taxation. So even if you leave the country and you've been living here and your business is in continuity, it then means you're still going to get taxed. So this is also the same below expat to workers after income tax benefits removed. So it means that those people, the foreigners, the CBK data shows that foreigners living and working in Kenya, they are sent to their home countries. So there's a record of 86.99 billion in the year 2023. So this amount is equivalent to 7.25 billion a month. Yeah, that is quite good money when you're thinking that the government really needs money. So that's why they need now to expand ways of getting more money, and they're doing this through also now taxing the non-resident who are doing business in the country. So this will give rise to, when this is done, then this means they're going to give rise to 24.3% rise of revenue collection, which is 69.96 billion. So the Finance Act 2025, it has granted KRA the expanded powers to collect taxes from persons not residing in Kenya but are subject to tax in the country. So the other thing is on the VAT withholding. This is a 2% on the VAT. So there's some hitches that has been brought by because when you look at VAT, the way it works, they've brought up so many uh, good way of collecting taxes through VAT, and they have streamlined that way. So they brought up the e-teams, then they also brought up the VA system. So now, for example, right now, when you go to the KRA portal, you're going to realize there is that model of, they've added, I think, two models. They've added one on the purchases and then the other one on sales. So this means that you cannot claim a sale that you did not do or you did not input in the system. That's one. Two, you can also not claim purchases that was not put in the system by the buyers or by the customer who did it for you. The customer is the one who is supposed to put that data. So when they put it, it's supposed also to reflect on your side. And also when you put the sales, it's also supposed to reflect on your side. That's why on the KRA portal, it has those two models, and that's why they've put that model in a way that there's not going to be any inconsistency. And also it's like they are trying to tighten that loophole that was there before. Like you could just put any sales, you can just put any sales number, you can just put any date. Nowadays, you can't put any date, you can't put any amount. You like they have to be very, very consistent with what the buyer and the customer have. Both of them have to match. So this is also explaining about the e-teams and the VAA system. So another thing is that we are now in a new digital era, and that's why the tax management have put up the e-teams. So ETIMS and ITATs carry possess comprehensive oversight of the taxpayer transaction. So this is enabling the effective validation and early detection of irregularities, as I have explained before. And now that's why the taxpayer is like, I think there's something wrong because we need also to align the country's withholding VAT regime, because it's not really working well, because also it's there are some loopholes. That's what I can say. There are some loopholes with it. So that's one thing they need to work on. The other one is on the taxes on beer, cigarettes, and taxes record the steepest drop in 5 years since COVID. So, collection from domestic excess duty for the financial year 2025, it dropped. Now, from the budget that, not the budget, but from the financial year that we had, so in June 2025, it dropped with 5.75, which is equivalent to 69.39 billion. Sorry. So the KRA reported this was reported by KRA last week. Yeah. So this decline in absolute terms from the previous year to 73.62. So that was the first drop in collection from the sale of domestically manufactured accessible products. When the receipt contracted 6.39, and the last drop that was there before, it was the one when we had COVID, and basically because there was shutdown of bars and which were forced in. Good news again. So there's a Treasury extends tax relief to home construction loans. So I had mentioned, so it means that we have two reliefs. So from my presentation, it means that we have two reliefs. One, we have the one for pension, and now this one for construction loans. So Kenyans tap in loans to build. I'm so sure so many people and maybe others in this call who have tapped loan to build. And building, I mean residential homes, not commercial homes for this in this case. So these have been handed a boost after the Treasury expanded a preferential provision that now allows them access to interest deductions against their taxable income. All right. So in changes to the Finance Act 2025, taxpayers can now claim an annual deduction of up to 360,000 on interest paid for building, buying, or improving residential property, provided the loan is more for one prescribed lenders. So previously, the deduction only applied to home purchases or renovations, leaving out on those. So the ones that I have mentioned earlier. So that is good news. So the other thing is, where are we with debt? Maybe I can get some ideas or where you guys think we are on debt on our chat box. How much do you think we owe China, for example? Anyone in the chat box would like to see your views? You can just give me any figures, random figures that you think we owe. Another says 500 trillion. Valentine says we have defaulted on a payment. I know why. I know what you're talking about. I'll mention it though. Anyone else? All right. It's interesting. So the government will spend 531, that is dollars. So it's 68.7 billion towards external debt repayments this month. So denting the official forex reserves, which are currently at a cost of 1.43 trillion. So the obligation represents a decline from 71 billion up to July 2024, that largely on account of falling interest rates on floating rate loans. So January and July usually account for the biggest external debt service load, yeah, and interest payments to China for 656.5 billion. That is at today's rate, because remember, these dollars will always change, yeah? So, which was contracted in 2014 and 2015 for construction of the Mombasa, Nairobi, Naivasha standard gauge railway. So, Kenya to repay 68 billion foreign debt this month. Okay, so the loans were on a mixed concessional and the commercial terms. So the latter being pledged on the now expired London Inter bank offered rate plus a premium. So I think you guys know about that. So the World Bank analysis, Kenya continuing external debt obligation shows that payment to China, it will stand at 55.8 billion, and the principal is 37.66, and the interest is 15.6 billion. So the Treasury normally buys dollars from CBK to make its external payment obligations, such as debt service, as I've talked there before, and the government supplies imports. Yeah, it also sells the dollars it receives from foreign loans to the monetary authority. So this movement of the exchange rate can therefore lower or raise the amount in shillings required to service external debt, even when the amount in dollars is constant. Yeah, and that's why they said there before that that amount will, it's going to differ from uh, how much the exchange rate is going to be at that point, because the debts are in dollars. So other significant debt obligation this month, which is now, this is the interesting part, include a semi-annual interest payment of 3.8 billion and on the $1 billion. So I think you guys know about the story about the 12-year euro bond that the country floated in mid-2021. The bond carries an annual coupon rate of 6.3%. So just a recap of how that story went. So that was in mid 2021. So I think that's a time Uhuru was in presidency that time, and we took Eurobond, yeah, and from out of nowhere, one of the Eurobonds just got lost. So guys, we are still paying for all the Eurobond, even the one that got lost. Yes, FYI. So the other end, the strong shilling cuts Kenya's foreign debt by 1 billion trillion in January, which is good news. So when the shilling is strong, it's good for us as a country because one, you see, it reduces our foreign debt. So because we are able to pay the amount for that month for that debt. So when the shilling is better, the better for us. So all my shoppers, hi, online shoppers. So we have been caught. So shoppers are going to be expensive. Why buy now, pay later shoppers face higher prices? And this is because there's an excise duty that has been added in the Finance Act 2025. So this means that it's better you just go to the shop yourself. So this is just a summary of how loans have been. So the digital loans from 2021 to 2024. So the digital loans have increased. Yeah, same case to Lipa Mdogo Mdogo, which I even find it more expensive than just buying it once, and MFIs have decreased. Another interesting bit and the highlight is in the shift. So you all know that we had NHIF. NHIF has been doing well for us for the last like over 5 decades or so. And regardless of it, so why they changed it to shift is because they wanted to put something that can accommodate everyone. So that means if you're working and also if you're not working. So, but now in HIF, it's like it did not have that really universal vision, according to them. Yeah, and that every Kenyan, regardless of their income or employment status, they should have access to the essential health services. So, however, even if right now SHIV has a lot of hiccups, we are told as the government is trying to tell us that SHIV is here to stay. So, kindly, even if you are not, you're not you're not you're not paying the same to the government, you really need to, because at the end of the day it means that you are not compliant, and when you're not compliant, you know what this government will do to you. You'll just get penalties left, right, and center. So on the finance bill 2025 highlights, yeah, as I had said before, then before the beginning of as at the beginning of this webinar, is that KRA are really trying to collect as much as they can. So that's why they're doing all these changes, like a good 95%. So one of the things is that the zero rating status have been converted to the tax exempt for several items. And what does this mean? This means that this change is going to eliminate the ability for you to claim VAT. So for these ones are anything that was under zero rated. So anything, but there are specific items that have been changed from zero rated to tax exempt. So these include the electric bikes and buses, the packaging materials for tea and coffee, the solar and lithium batteries, then raw materials for my pharmaceuticals industry, and animal feeds for my farmers. So that means there going to be some hike in the prices of that. And I did a research, it's going to be now, like for the pharmaceuticals, it's around 25 shillings, 25 shillings or so. Yeah. So the income tax changes, and 25 shillings, it depends with which pricing. I'm not saying that some drugs for 5 shillings is going to be, no, it depends with the cap of the drug. So the income tax changes. Good news for us, the per diem have been increased from 2,000 to 10,000. Hooray. And then there's a tax-free pension. I had explained about that. Then there's expanded royalty definition of the withholding tax. Then the companies can now carry forward tax losses for up to 5 years. So that is, they have increased that timeline. So replacing the previous indefinite period. So the previous one did not have like a timeline. At least now this one they've given a cap. Then the digital and foreign entities. So we have SEP, the significant economic presence, footprint extended to internet businesses operating in Kenya. Then there's a proposal to allow APAs for cross-border transfer pricing arrangements effective January 2026. Then good news to the digital asset tax, which is covering crypto and also NFT. It has been reduced from 3% to 1.5. So why is it different? Like, why is this finance bill 2025 different from others? One, there is no new headline of tax hikes. So this has marked some clear shift from finance bill 2023 to 2024, which has introduced like unpopular VAT and excess duties on essentials. Two, the bill it explicitly repeals proposals. It's like whatever was there before, it has just repealed. So that will allow unfettered carrier access to personal bank or mobile money data. I remember I had mentioned that on the last webinar, that they really wanted to have, like KRA wanted to have access to your personal bank and also for example, your business is working. So you have to give them like that personal data. So that one wa- was cancelled out. And then it seeks to balance revenue mobilization. So this was very clear from the protest for the last year. So it's like they listened. So yeah, and that marks the end of my presentation. Thank you, and I can welcome any questions.
Thank you so much, Cecilia, for the some presentation on how we need to be prudent in the tax matters, lest we end up making a lot of mistakes and penalties. So Ananda has a question. Cecilia, did you say Kenyans living abroad will also be taxed, or what did I hear?
No, non-resident. So non-resident means I'm Asian, or which other, or I'm Nigerian. I'm not Kenyan, and I've registered in Kenya as a non-resident. Yeah. So, and I have started business here. So it means ideally I'm supposed to be paying taxes in Kenya. So that's what it means. But I knew people will get it's like Kenyans who live abroad are supposed to pay taxes. No, no, it's not like that. I hope I'm clear.
Anyone else with a question? We can ask you, Cecilia, can a business person be fully compliant?
A what?
Can a business person be fully compliant?
Yes, they can. You guys can.
Mm-hmm.
You
And
just
evade
need to
any
make
penalties.
sure your things are, in order. You just need to make sure you have, first of all, a TCC. But at times you might say you can have a TCC, but when KRA does or digs out your dirt, is now when you really understand I've not been compliant. But yeah, you can be compliant. Just making sure that your things are in order and you're doing as per the government. If it says you guys need to file or declare taxes by 20th, just do so. And not half, just declare everything.
Keyword is declare everything. Yes.
Declare everything. And that's why you have finance consultant, you have tax consultants like me. I will really guide you on how to do it, but in a
Yes.
compliant.
In a compliant way. Hata
Yeah.
hutaki shida. Yes. Monica, thank you for joining. I joined a bit late and I was interested on the part of investing in bonds. How does it go? And what is the minimum amount? Maybe I can ask you also, do you have a Dow CSD account? So I can take you back to the slide. After that, are you able to see the slide? So, Monica, as I was saying, for bonds, are you able to see these? I think I can. I think when you're sharing, you can't see the chart. When you want to invest in bonds, first of all, you must have an active DAO CSD account that you can register through the CBK websites, and also they also have an app. And then for bonds, I always advise a minimum of okay, not a minimum. The minimum that you can do is 50,000 to even any amount that you want. But now how bonds are structured is that they pay coupon interest every 6 months. So and if you want to make the maximum profit from the bond investments, I always advise a figure above 1 million because of their redemption structure. So for the bond that one of the bonds that has been reopened, IFB1 that was issued in 2019, sorry, 2022 for 19 years, it has a 10-year period of a remaining period of 15 years. But if you invest 1 million and below, after 7 years on 2032, which is the stated redemption structure date, you will receive all your money plus the last coupon interest, because it usually mandates that you receive 50% of your investments if you have done more than a million. But if you've done a million and below, you receive all your money as at the redemption structure. That is how infrastructure bonds are structured. So, but if you do 2 million and above, the same date on 2032, you will receive 50% of your initial payment, which will be 1 million. And initially, you'll have been receiving a coupon interest of 129,000 every month. So after 2032, now your principal also reduces to 1 million. Then now even your interest payments are reduced to the principal, which is calculated on the principal amount. So at the end of 15 years, you'll have made an interest of 2.9, yet the principal amount was 2 million. So you see, if you put to amount of 2 million and above, you're able to enjoy the interest of the full term of 15 years. So if you only do 1 million and below, you will have invested for 7 years only, not the full 15 years. Are we together? So you can consult me
So
further
that's
on
for
this.
7 years.
Yes, because of the redemption structure period. It's the same bond, but now depending on the amount that you have put.
Okay.
Yeah. If you put more money, you'll enjoy the full 15 years because of the redemption structure. It will only give you 50% of your amount and another amount remains. But if you put a million and below, you'll have only invested up for 7 years. So the amount, your amount that you have, the goal that you have really determines how much you put in an infrastructure bond. And then I said also bonds are long term. So make sure the money that you're locking in is not money that you want to use for something else, because now trying to sell bonds in a secondary market is usually very hard for retail investors. So make sure you lock in money that you've already set up your emergency fund, you've already set up your protection covers, the medical insurance and what's here and there, so that you're able to recoup better investments. Yes, Monica, the higher the amount, the better the interest. Yes, and the better you're able to utilize the full period term of the bond. Yes. So you can reach out to me if you want to find out more, because these bonds are the July August bonds have 3 weeks bidding period, and after that you're not able to bid anymore. Because as I also always tell my clients, CBK is not your mother. If you bid and also when you're bidding, you must have the money in your account. It's not about that money is coming. You know how the Kenyanese behavior. Kuna pesa inakuja, kuna pesa inakuja. No. CBK can actually blacklist you if you bid and don't remit the funds. So I think we can put our contacts, Cecilia and I, in the chat. If you have if you're in need of a tax consultant, a financial consultant, you can reach out to Cecilia. Then if you want some more investment knowledge on bonds, shares, and I also do individual consultations, couples, your charmers, you can reach out to me. Yes. Anyone else with a question? Thank you, Monica. Thank you, Ananda. Yes. Anyone else a question before we close it up? Yeah, thank you, Ananda.